The XRP community is buzzing with whispers of XRP skyrocketing to nearly $60,000 per coin. But is this a glimpse into a hidden future or just digital fiction? The excitement isn't baseless. XRP's focus on real-world utility, especially in cross-border payments, gives supporters a powerful narrative. Ripple's partnerships with financial institutions aim to build a new global financial system, making XRP more than just a speculative asset. As of October 28, 2025, we explore the origins of this prediction, its improbability, and the real developments shaping XRP's trajectory. From the SEC case resolution to advancements on the XRP Ledger, there's real news to discuss. Let's dive into separate fact from fiction in the world of XRP. The explosive rumor of XRP's price traces back to a phantom Forbes article, supposedly predicting XRP's rise to nearly $60,000. Early AI chatbots cited this non-existent article, creating a feedback loop that gave the rumor undue credibility. Fact-checkers found no trace of the article, revealing it as digital folklore. Forbes' real coverage of XRP is grounded in reality, with predictions far from the rumored tens of thousands. The mathematical absurdity of such a price is clear. A market cap of $3.5 quadrillion is 33 times the global economy. Despite its impossibility, the rumor resurfaced, demonstrating the power of a compelling narrative in a sentiment-driven market. For serious investors, it's a lesson in due diligence and the importance of verifying sources. The legend of the $60,000 article is a cautionary tale for the digital age. Why does a false rumor like the $60,000 XRP prediction gain traction? The answer lies deep within the collective psychology of investors and the unique dynamics of the crypto market. In a world where fortunes can be made overnight, even the most outlandish claims can spark hope and excitement. These rumors tap into the psychology of hope and the powerful desire for life-changing gains. For many, investing in crypto is not just about numbers, it's about dreams, aspirations, and the possibility of financial freedom. For long-term holders, stories of astronomical price predictions validate their patience and reinforce the belief that their commitment will eventually pay off. It's a comforting narrative that makes the wait feel worthwhile. This is a classic example of confirmation bias, where people naturally seek out and favor information that supports their existing beliefs while dismissing anything that contradicts them. In the world of crypto, extreme predictions sell dreams, especially to communities that have weathered storms like legal battles or regulatory uncertainty. These stories offer hope and a sense of belonging to something bigger. Social media algorithms supercharge the spread of these rumors, creating echo chambers where speculation is repeated so often it starts to feel like fact. The more people see it, the more believable it becomes. Influencers and online personalities, even unintentionally, can lend credibility to wild claims, blurring the line between speculation and reality for their followers. A lack of financial literacy leaves many investors vulnerable, unable to critically assess whether such price targets are even remotely realistic or grounded in economic fundamentals. Without understanding concepts like market capitalization or the scale of global GDP, predictions of $60,000 per XRP might seem plausible, even though they defy basic math. This knowledge gap allows misinformation to thrive, influencing not just individual decisions, but also short-term market behavior as rumors ripple through the community. Ultimately, it's a powerful reminder of why financial education is so crucial. In a fast-moving world like crypto, understanding the basics can help investors separate fact from fiction and make smarter, more informed choices. Grounding ourselves in facts, XRP's 2025 journey is far from the $60,000 fantasy. The year began with optimism after the SEC case resolution, boosting investor confidence. XRP's price surged, reaching a new all-time high of $3.55 in July. As of late October, XRP trades between $2.36 to $2.96. This performance solidifies XRP as a top-tier digital asset, ranking 5th by market cap. Its correlation with Bitcoin indicates broader market influence despite unique drivers. While not $60,000, a price near $3 reflects significant gains and market confidence. The real story is a hard-won resurgence, placing XRP back in the spotlight as a serious contender. A significant supply squeeze is shaping XRP's price in 2025, with over 12.4 billion XRP moved off exchanges into private wallets. This massive outflow is not just a number, it represents a fundamental shift in how investors are viewing the future of XRP. As more tokens are withdrawn from public trading platforms, the available supply for buyers shrinks, making each remaining XRP on the market more valuable and potentially more volatile. This behavior suggests holders are accumulating for the long term, reducing liquid supply. many investors are choosing to store their XRP securely, signaling strong conviction in the asset's future growth. By moving coins off exchanges, they're not just protecting their investments. They're also making a statement about their expectations for higher prices ahead. Basic economics tells us that decreased supply with constant demand leads to price increases. When fewer coins are available for trading, even a modest uptick in demand can send prices soaring. This classic supply-demand dynamic is now playing out in real time for XRP. The reduced supply amplified XRP's price surge to $3.55 in July. This rally caught the attention of both retail and institutional investors, further fueling interest in the token and reinforcing the impact of the ongoing supply squeeze. XRP's fixed supply of 100 billion coins, with 59 billion in circulation, adds to its value proposition. The transparent and predictable supply structure makes it easier for investors to assess scarcity and potential upside, especially as more coins are locked away in private wallets. Unlike fiat currencies, XRP is designed as a deflationary asset, attracting investors. As the circulating supply decreases, the deflationary nature becomes even more pronounced, making XRP increasingly appealing to those seeking assets that can hold or grow in value over time. However, if holders decide to sell, a sudden supply influx could pressure prices. The market remains sensitive to large movements, and any reversal in accumulation could quickly shift the price trajectory, reminding investors of the risks involved. For now, the trend of accumulation signals belief in XRP's continued journey and higher valuations. The community's ongoing commitment to holding and accumulating XRP is a powerful indicator of confidence in the project's long-term vision. This supply squeeze highlights the dynamics of market sentiment and long-term investment strategies. It demonstrates how collective investor behavior can directly influence price action and shape the future of a digital asset. It's a testament to the community's conviction in XRP's future potential, and a clear sign that for many, the story of XRP is just getting started. The SEC lawsuit was a major obstacle for XRP, casting a long shadow of regulatory uncertainty over the asset and its future. For years, the crypto community watched anxiously as the case unfolded, knowing its outcome would set a precedent for the entire industry. The legal battle not only affected XRP's price and reputation, but also left investors and companies hesitant to engage with the asset, unsure of what the future might hold. The case's resolution in August 2025 was a monumental win, affirming that XRP sales on public exchanges aren't securities transactions. This landmark decision sent shockwaves through the crypto world, providing long-awaited answers and setting a new legal standard for digital assets in the United States. This clarity removed regulatory ambiguity, allowing XRP to be relisted on U.S. exchanges. Suddenly, millions of American investors regained access to XRP, and trading volumes surged as confidence returned to the market. It de-risked XRP for institutional investors, enabling them to consider it without fear of regulatory reprisal. Major funds and financial institutions, once wary of legal consequences, began to explore XRP as a viable addition to their portfolios, opening the door to significant capital inflows. The launch of XRP ETFs provided a regulated way for investors to gain exposure to the asset. These new investment vehicles made it easier for both retail and institutional investors to participate in the XRP ecosystem, further legitimizing the asset in the eyes of the financial world. The resolution boosted investor confidence, marking a new era for XRP. Optimism swept through the community, and the asset's price reflected renewed faith in its long-term prospects. The U.S. regulatory landscape is becoming more favorable, with laws like the Genius Act signaling a shift towards digital asset frameworks. Policymakers are now working to create clearer guidelines, aiming to foster innovation while protecting investors. This environment supports blockchain-based payment solutions, like those powered by XRP. As regulations evolve, businesses and consumers alike are finding it easier to adopt and trust these new technologies for fast, secure, and cost-effective transactions. Ripple's technology continues to embed into global payment networks, creating sustainable demand for XRP. Its growing adoption by banks and financial institutions worldwide is a testament to its utility and staying power. The legal clarity is a critical tailwind for real-world adoption and XRP's future growth. With regulatory barriers removed, innovation can flourish and new use cases can emerge. It's a turning point that positions XRP for broader integration into the financial system. The path is now open for deeper partnerships, cross-border payment solutions, and mainstream acceptance. The dawn of this new era is a testament to the resilience and potential of XRP. As the world embraces digital assets, XRP stands ready to play a pivotal role in shaping the future of finance. Beyond headlines, XRP's most exciting developments are technological, with the XRP Ledger evolving for real-world asset tokenization. Tokenizing assets like real estate and stocks offers efficient, transparent trading with greater liquidity. RealFi, a standout project on the XRPL, bridges cryptocurrency and real estate, enabling property purchases with digital assets. This real-world use case showcases the XRPL's capability for complex transactions. The XRPL's low fees, fast settlement, and scalability make it ideal for tokenizing assets. As more projects build on the XRPL, tokenizing everything from real estate to carbon credits, XRP's utility grows. Every transaction on the XRPL consumes XRP, creating sustainable demand. This future of tangible utility, not speculative hype, is what long-term supporters are betting on. As we look to the future, XRP's narrative shifts from legal battles to real-world adoption and innovation. Ripple's expanding payment network, spanning over 90 markets, is a key development to watch. Partnerships with SBI Remit and Onafreak indicate growing utility and real-world XRP demand. The rise of stablecoins, including Ripple's RLUSD, presents both opportunities and challenges for XRP. The interplay between XRP and stablecoins will define its role in the financial ecosystem. The growth of the XRP Ledger for tokenization is an exciting long-term signal. Projects like RealFi and the value of tokenized assets on the ledger are key metrics to watch. The shift from speculative asset to utility token is crucial for XRP's long-term success. The real story of XRP's comeback, legal victory, and technological evolution is compelling. Stay informed with reliable analysis to navigate the complex market and what comes next.